Hello traders, it's Thursday, August of 17th and this is Alan Hong, market analyst of GKFXPrime. I'm gonna share my daily analysis through this video, and first of all, let's review the major market movements. So the first instruments, we are referring to the dollar index in 4-hourly charts. So the US dollar index, which measures the greenbacks ranks against the trade rate basket of 6 major currencies, was headed weaker as the series of minutes show an increased debate about another rate hike this year. So the dollar was last quoted down 0.36% to 93.41. Overnight, the US dollars traded near 3-week high against a basket of global currencies on Wednesday after recent economic data pointing to a strengthening US economy lifted the expectation of a third rate hike later this year. But however, officials appears to be developing at the Federal Reserve over when to raise interest rate as one group sees a low inflation environment while another worries over the price of delaying. The divide appeared in minutes released from the Federal Open Market Committee (FOMC) July meeting. So when central bank policymakers vote to hold the target rate of a range of 1% to 1.25%, the summary portrays views that the inflation ultimately will get to the Federal Reserve 2% target, but is clearly not there yet. And earlier, Cleveland Federal Reserve President Loretta Masto said that while some price readings have fallen this year, expectations are more stable, adding that monetary policy must anticipate changes in the data and not react to temporary aberrations. And she said there is roughly an equal chance that the Federal Reserve is forced to raise rates more or less aggressively than currently planned in the months and years ahead. So the dollar continued its positive start to week, as solid retail sales data on Tuesday overshadows a slump in the US housing data amid growing expectations the Federal Reserve will increase interest rate for a third time later this year. So the housing starts dropped 4.8% to a seasonally adjusted annual rate of 1.16 million units. This is according to the Commerce Department, said on Wednesday. So the unexpected dip in housing starts, however, didn't deter investors' expectations of a rate hike later this year, and according to the Federal Reserve Interest Rate Monitor tool, nearly 50% of traders expect the Federal Reserve to hike rates in December, and compared to just 37% last week. Looking into another currencies, the pound fell lower against the US dollars and down 0.18% to 1.2866 on Wednesdays, despite the data showing the UK unemployment fell to its lowest level since 1975. While the euro was traded lower against the US dollars, lost 0.34% to 1.1694 overnight on the back of preliminary Eurozone gross domestic product data that failed to lift sentiments on the single currency. Having a tad in commodities markets. So the gold price, the investors now took advantage of more confusion about Federal Reserve policy on rates and took the precious metal higher in Asia on Thursdays. So it was rose 0.8% to $1,393.21 a troy ounce after the meeting minutes released overnight cast some doubt on the third rate hike this year. So the gold price is sensitive to move in the US rates, which leave the opportunity cost of holding non-yielding assets such as buildings. As for the oil price, the crude oil price was settled lower on Wednesday, fell by 77 cents to settle at $46.78 a barrel, as the data showing US crude production rose to its highest in over 2 years, and which offsets a decline in supplies of US crude for a 7th straight week. So the crude oil fell for the third straight day after a report from the Energy Information Administration, the EIA, showing crude stockpiles fell by more than expected last week, failed to offset concern over a rise in production. So inventories of US crude fell by roughly 8.9 million barrels in the week ended August 11th. So this was confounding the expectations of a draw of about only 3 million barrels, and it was a 7th straight week of falling crude inventories. So the reports also highlighted total crude oil productions rose to 9.502 million barrels per day, an uptick of 79,000 barrels a day compared to last week's. So that was the highest weekly output figure since middle of July 2015, and it was sparked the fresh oversupply jitters, which was pressuring on oil price. So now we're gonna review the highlighted economic data and events that on yesterday, as well as the focus economic data and events for today. So yesterday, the United Kingdom was released a series of employment data, including the average earning index plus bonus for June, and it was at 2.1% growth, which is much better than the expectations of economists. As for the claimant count change for July, it was at negative 4.2k, alright, so this is better than expectation as well. So during the North America trading hours on yesterday, United States was released the building permits for July, and it was at 1.223 million, which is slightly lower than the expectations at 1.250 million. Alright, so this was one of the pressures on the US dollar index on yesterday. And for the crude oil inventories, yesterday was released at negative 8.945 million. Okay, so it was drawn much more than the expectations. Alright. So as for today, during the morning Asia hours, Australia was released the employment change for July, and it was at 27,900, okay, which is better than expectations. So during the European trading hours later, United Kingdom is going to release the retail sales for July, and it is expected to be slightly weaker. And as well as the European unions, we're going to release the consumer price index, which refers as the inflation as well. So it is expected to remain the same growth at 1.3%. Okay, so during the late night trading sessions, the United States is going to release the Philadelphia Ferris of Manufacturing Index for the August data, and it is expected to be slightly weaker compared to previous 19.5 and expect to fall towards 18.5. And now it's a technical analysis sessions, and the first instruments we are going to refer to the GBP USD pair in 4-hourly charts. So the pair will remain traded in a downtrend but losing momentum, and the both moving average line was continued expanding downwards. But however, it is expected to be moved slightly higher in short term based on the signal shown in the MACD indicators, with the both movement lines will cross and pointing upwards. Additional with the momentum level, which grew to the level above 0. So a price closure that's above 1.29500 is a signal to experience a short-term retracement and move further higher towards the next resistance level at 1.3000. Otherwise, the price closure that below 1.28400 suggests to continue its downtrend and fall further towards the next support level at 1.27400. For the euro, it was traded in an uptrend against the US dollar, but seemed like lack of momentum to move further higher. So the pair is remain ranging between 1.17000 and 1.18300. So a price closure that's below 1.16800 signal to retrace more in short term and fall towards the next support level at 1.16100. Otherwise, closure above 1.19100 suggests to continue its uptrend and refill the next resistance level at 1.20000. As for the Kiwi, it was traded in a downtrend against the US dollars, and the price was closed above the resistance level of 0.73000. So it's a signal for it to experience a short-term retracement and move higher towards the next resistance level at 0.73400. So referring to the MACD indicators, the both movement lines pointing upward and the momentum grew to the level above 0, suggesting for further upside in short term. While the Aussie traded in an uptrend against the US dollars, and it seems like gaining back momentums. So the price was closed above the both moving edge lines, and so that a price closure that's above resistance levels of 0.79500 signal to continue its uptrend and move further higher towards the next resistance level at 0.80600. Meanwhile, the Japanese yen traded in a downtrend against the US dollars, and it was gaining back the momentums. So the price was closed below the both moving edge lines and a support level of 110.000. So it's a signal to for it to move further lower along with the downtrends. So the next support levels we can refer to 108.800. As for the commodities markets, the gold price remained traded in an uptrend, but it seems like lack of momentum at the time being. So it was remain ranging between 1,270 and 1,290. And referring to the MACD indicators, the both moving average lines were crossed and pointing upwards, along with the momentum which grew to the level above zero, signal to move further higher in short terms. So a price closure that's above 1,292 suggests to continue its uptrend and move further higher towards the next resistance level at 1,295, following by 1,300. As for the oil price, the West Texas Intermediate oil price remained traded in an uptrend, but currently is still retracing. So the price was fell below the support level of $47.20, and both moving average lines will remain expanding downwards, following a formation of the dive cross earlier. So it's a signals for it to retrace further and slightly lower towards the next support level at $46.30. So a closure that's below $46.30 suggests for a change in trend directions to become downtrend. That's all for my analysis to date. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.